Assalamualaikum warahmatullahi wabarakatuh. Hello, my name is Salma Alisha Sahdiya with NPM 234122046 from Accounting Class 23A, Financial Statement Analysis course. Here I will explain the material types of financial statements, elements of financial statements and benefits of financial statements. Types of financial statements. 1. Income statement. This statement shows the company's revenues, expenses, profits, and losses in a given period. Revenue. Proceeds from the sale of goods or services that are the main activity of the company. Expenses. Expenses incurred during the company's operations, such as production, administration, and marketing costs. Profit or loss. The difference between revenue and expenses. If revenues are greater than expenses, the company earns a profit, while otherwise, the company experiences a loss. 2. Statement of financial position, balance sheet. Displays the position of a company's assets, liabilities, and equity at a given point in time. Assets, resources owned by the company, that have economic value, such as cash, accounts receivable, inventory, etc. Land, buildings, and equipment. Liabilities. The company's debts or obligations to other parties, such as accounts payable, bank debts, and bonds. Equity. The capital owned by shareholders after deducting liabilities, which reflects net ownership in the company. 3. Cash flow statement. Shows the movement of cash in and out in a period. Operating cash flow. The main activities of the company: sales, payment of salaries, purchase of raw materials. Investment cash flow. Purchase or sale of long-term fixed assets and investments in other companies. Financing cash flow. Transactions related to the company's capital or debt. Describes how the company funds its operations and expansion, such as issuing new shares, borrowing or repaying debt, and paying dividends to shareholders. 4. Statement of changes in equity. This statement reflects changes in shareholders' equity, including new investments, dividends, and retained earnings. 5. Notes to the financial statements. Notes to the financial statements are an important part that complements the main statements. They explain accounting policies, details of assets and liabilities, and other information that helps readers understand the company's financial condition more clearly and transparently. Elements of financial statements. The main elements in financial statements include assets, liabilities, equity, revenue, expenses, and profit or loss. Assets are the resources a company has to generate profits, such as cash, inventory, and investments. Liabilities are the company's financial obligations to other parties, such as loans and accounts payable. Equity reflects the owner's right to the company's assets after deducting liabilities, indicating the net worth of the company. Revenue is the income earned from business operations, such as sales of goods and services, while expenses are the costs incurred to run business operations, including production, marketing, and administrative costs. Profit or loss is the result of the difference between revenue and expenses in a given period. Benefits of financial statements. Financial statements have an important role in decision-making for various parties. Investors, as a reference in assessing potential investment returns and risks. Management, as a basis for evaluating performance and making business decisions. Creditors, assess the company's ability to fulfill its debt obligations. Government, as a basis for determining tax and economic policies. Society, to understand the company's economic impact on the surrounding environment. Conclusion. Financial statements are important tools that present information about a company's financial performance and condition, consisting of 4 main types: income statement, statement of financial position, balance sheet, statement of cash flows, and statement of changes in equity. The main elements that make up these statements include assets, liabilities, equity, revenue, expenses, and profit or loss, which together provide a comprehensive picture of a company's activities and value. Financial statements are useful for various parties, such as investors to assess investment prospects, management in making strategic decisions, creditors in evaluating the feasibility of lending, the government to determine taxes and policies, and the public to assess corporate social responsibility. That's all I can say about the material types of financial statements, elements of financial statements, and the benefits of financial statements. Wassalamu alaikum warahmatullahi wabarakatuh.